we can now discuss something that has been non-discussable for a little bit. I'm going to be very careful and intentional about exactly what is said in the next couple of minutes, because I don't think this is my story to tell. I don't think that I've got any opinion outside of what we're going to read here. BlockFi, which many people know, I'm a large investor in, has reached a resolution settlement with regulators over regulatory questions around a number of their products. This is probably, I think, and I don't want to misspeak here, but I think this is the largest settlement in crypto history to date. And what we can do here is we're going to pull up let's start with Zach's tweets. Zach just put out a bunch of tweets here. So I'm just going to read them and then we'll discuss. Huge day for BlockFi and our interest-bearing product, the BlockFi interest account. We've reached a resolution with both the SEC and state regulators that identifies a clear path forward for folks to earn interest on their crypto. My point of view below. He says that he's going to outline 3 things: why settlement is needed, what this means for our clients, and where do we go from here. First, I'd like to note that client funds are safeguarded and accessible. Now, BlockFi will continue to grow and build. No client funds are being utilized to pay for the settlement. Next, this settlement is related just to our BlockFi interest account product for U.S. clients. Our other products, including wallet, personalized yield, loans, credit card, and trading, are unaffected by this settlement. Our institutional products, including BlockFi Prime, are also unaffected. Why the settlement is needed? We have worked tirelessly over the past several months to secure this clarity for our clients, and I am not being hyperbolic when I say this was the key focus of every single conversation we had with regulators. What does this mean for clients? If you have a BlockFi interest account today, you will continue to earn interest as you always have. There will be a pause where U.S. folks cannot add new funds into their BlockFi interest account and can't open a new BlockFi interest account. Outside the United States, clients can continue to deposit into and open new BlockFi interest accounts. Where are we headed? We will be starting the registration process with the SEC for BlockFi Yield, a new crypto interest-bearing security. Then, once complete, BlockFi interest accounts will convert to BlockFi Yield, and new deposits and client signups in the U.S. will be enabled. In the interim, all clients with funds in a BlockFi interest account will continue to earn interest as they always have. Our new product, BlockFi Personalized Yield, will also remain available throughout the registration process. Huge thank you to our incredible team at BlockFi, who has worked tirelessly on this matter since last summer. And thank you to all our clients. We'll continue working hard to deliver more value to you through our products and services. I encourage everyone to read the official press release from BlockFi, available here. And as always, please don't hesitate to contact BlockFi support with any questions you may have. Now, if we go and we actually pull up the press release itself, press release states that BlockFi Lending, a subsidiary of BlockFi Inc., has entered into a resolution with the U.S. SEC, North American Securities Administrators Association, providing regulatory clarity and a path forward for clients across the United States who want to earn interest on their crypto assets. As part of the resolution, BlockFi intends to file or confidentially submit a registration statement on Form S-1 with the SEC for the offering of BlockFi Yield, which is anticipated to be the first SEC-registered crypto interest-bearing security. We then have a quote from Zach. It says, from the day we started BlockFi, we have always known that strong engagement with regulators would be critical for the adoption of financial services powered by cryptocurrencies. Today's milestone is yet another example of our pioneering efforts in security regulation. In securing regulatory clarity for the broader industry and our clients, just as we did for our first product, the crypto-backed loan. We intend for BlockFi Yield to be a new SEC-registered crypto interest-bearing security, which will allow clients to earn interest on their crypto assets. BlockFi cooperated with the government's investigation and implemented remediation actions. Both the SEC and state-level agreements contain no admission or denial of wrongdoing or liability. As part of the resolution, existing U.S. BlockFi interest-bearing accounts, and he goes on to describe exactly what's going to happen, which he tweeted as well. And of course, all other products will continue. Now, what I am about to discuss here is my personal opinion. I don't speak for the company. I don't have as much information as the executive team has, etc. I was not privy to the conversations with regulators. So this is my personal opinion. Obviously, I've talked to Zach. I've talked to other members of the BlockFi team. But I do think that a couple important points here. First, regulators are trying to figure this out. I think most regulators have good faith efforts. They are trying to understand what's happening in this industry, trying to understand what the technology is, trying to understand what users and consumers want, and also how businesses can be built here, economic value can be created, jobs can be created, and users can be serviced. So I think that you've got to understand in a fast-growing, complex industry, regulators are trying to figure it out just as much as companies and entrepreneurs and investors and users are trying to figure it out as well. There's education that goes on and also understanding. The second thing is there obviously now is a bifurcation. US-based users are going to be treated one way. International users are going to be treated a different way. That is for some period of time. Let's call that a temporary period of time. The international users are going to be able to continue to access the BlockFi interest accounts. They'll be able to create those accounts, be able to add to those accounts, and kind of business as usual. Inside of the United States, there's a pause for a moment. I'll get back to that pause in a second and when that pause will be lifted. There's a new product that BlockFi has called personalized yield. What that means is that you can still get yield on your assets. It's just done in a more personalized way. BlockFi will not say, hey, everyone is going to get X percent. Instead, you go to BlockFi, you say, here's my assets, here's who I am, etc. What can you give me? And then there's a negotiation that goes on, and they'll quote you a price, and you can either take it or leave it. Now, the pause is because BlockFi is going to, as they mention here, submit an S1, not for the company to be publicly traded, but an S1 for the actual interest-bearing account, which means that the interest-bearing account will now be garnered as a security. There are pros and cons to that. There's a lot more transparency. There's a lot more reporting. There's a lot more oversight and regulation, et cetera. It makes it a little bit harder to do business, obviously, right? Because of all that reporting and oversight, et cetera. But again, based on those discussions, both groups thought this was the best path forward. And so BlockFi is going to go ahead and do that. Once that S1 is actually approved, then the pause on the BlockFi interest accounts will be lifted. Is kind of the process at which this happens. And so those accounts will then be registered securities, be governed that way, be operated that way, and will be off to the races. Now, what's interesting is when you look at these interest-bearing accounts, obviously your bank provides interest in an interest-bearing account on your dollars. Those are not considered securities, and therefore those financial institutions do not have to meet certain regulatory kind of requirements. There are other types of regulatory requirements that they have to meet as a bank and other types of regulators that they have to appease. But in this case, this interest-bearing account with crypto as the currency or the unit of account will be considered a security on the BlockFi platform. Now, of course, that specific situation, again, is interesting because it now sets a precedent that this specific product is going to be treated much more like a debt security than it would a currency-based savings account like in the traditional banking system. And so I think that what jumps to my mind, again, this is my personal opinion, is that I've said over and over and over again that one of the critiques of the crypto industry is that there are no rules, is that there is no kind of oversight. It's the wild, wild west. You can do whatever you want. People are breaking the law. People are violating securities law, et cetera. But I continue to say that there is more regulation in the crypto industry than there is in the legacy finance industry. And people always say, what do you mean? And what I've always said is that, let's use two examples. If you are in the state of New York, Wall Street, New York City, Manhattan, is the heart of the financial system globally. It's the capital of the finance system. If you want to start a crypto company, you have to get more regulatory approvals than if you simply want to start a fintech, a financial technology company that isn't a bank. So if you want to do lending or savings accounts or other types of things, in many cases, if it's with crypto, you actually have to go and you've got to get the BIT license, which is a additional step in the regulatory process to be able to be allowed to operate as a business in New York, serve New York-based customers. These other businesses do not need to do that. And so from that perspective specifically, crypto companies have more regulation. The second thing is that the asset themselves, if I go to dinner tonight and I spend dollars or I spend a foreign currency, I simply pay for the meal, I tip the waiter or waitress, and I pay my sales tax, and I'm good to go. If I then go try to spend Bitcoin or cryptocurrencies, then what ends up happening is I pay for the meal, I tip the waiter or waitress, I pay my sales tax, but I also am subject to capital gains on those assets as well. And so whether you are looking at it from operating a business inside of the financial capital of the world, or you are talking about as a user anywhere in the United States trying to actually spend these assets, then there is more regulation. There's kind of or there's additional regulation compared to the traditional system. Now, another example, now we can add this as a third one, is that if I have an interest-bearing account with dollars in them and I earn that interest, it's not considered a security. And so the issuer or the person who's offering me that product doesn't have to operate as if it's a security. And I, as an individual, don't have to have any concerns around securities or securities laws because I'm simply using that with a US dollar-based interest account. Now what we are seeing is that if somebody was to offer the same type of interest account, but a different asset instead of dollars or some other foreign currency, now with a digital currency or a cryptocurrency, it is treated as a security. And so again, people will debate pros and cons. Should this not happen? Whatever. But again, there is more of a bar to be met for crypto companies. So now we have 3 examples as to how this is more regulated rather than less regulated. Now, the other thing that I think is important here is what we are watching is this is a big number, right? It's $100 million in terms of the settlement. And I think that what people are going to begin to realize is that there's a lot of companies that were very early, they were very innovative. They pushed the pace of innovation. They were pioneers in many cases. And those companies that were considered startups are now maturing. They're growing up. They're becoming the leaders of this fast-growing industry. BlockFi is obviously one of them. They're a multi-billion-dollar business. They service a lot of customers. They custody a lot of assets. They serve customers, everything from the largest institutions in the world all the way down to literally an individual with tens of dollars. And as they do that, one, obviously, as they describe in the Twitter thread and in the press release, they have to be able to engage with regulators. They have to be able to, have those conversations and continue to talk to the people in which have oversight over them. But also, these businesses, because they are the leaders in these fast-growing industries, they drive very large financial outcomes. They do that for investors. They also do that from a revenue standpoint. They do that for users as well. There's a lot of folks who have been using the BlockFi interest account as one example for a long time, and they were earning high rates of interest. And those high rates of interest ended up being pretty material because they were getting paid in cryptocurrencies that also went up over time as well. And so I think that there's a ton to unpack here. I don't think that I am going to be the only person who has opinions here. I don't think that I've got some unique perspective other than anyone else. But I do think that this is a very, very big deal. Obviously, the largest settlement that I know of in the crypto industry to date. And $100 million is a lot of money. But also, there now is a framework. There's a precedent in terms of how this product is going to be treated. And what it begins to ask is there's a lot of other companies in the space who have these products. What are they going to do, right? Are they going to go ahead and follow suit? Are they going to, kind of have a different take with regulators? We'll see.